Right guys, welcome to a new video. If you're new here, my name is Ruben. Today we're going to be breaking down all the trades that I called for my Discord this previous week. As some of you may know, it has been Thanksgiving, Black Friday, the conditions, look at the screen, the market is very, very choppy, there's not much volume. Now, before we get into that, on the screen here, you're going to see the stats. So have a look at the stats on the screen here. And what you're going to see is that this week, Asian session, there's been 0 losers. There's been a few trades called 0 losers. London session, there's been a few trades called, but with 1 loser. So our win rate over the last couple of weeks has been really good, but I want you guys to also appreciate, have a look on the screen here, at the start of this journey of me collecting data just for this month, we didn't actually have a good streak to start. And I want you guys to appreciate that you aren't always going to have a nice streak of trades to start. You just have to give it time for your edge to play out. But with that being said, let's get straight into the video. Let's go. If we go back to, not yesterday, but the day before, I'm recording this on Friday the 28th. This is where price was sitting. And let's just go back onto the 5-minute chart. Cool. Now, what you can see here, this space is called a new week or a new day opening gap. This one here, right? This from the start of the week. This is Monday. So I might actually zoom forward a little bit first. Let's just go back to yesterday. Here, cool. So here, this is where price is currently sitting. Now, on this given day, there was a short position, and you would have seen this on Twitter. If you're not following me there, go follow me there. I post trade recaps every single day now. The wins, the losses, everything in between, you learn quite a bit. There was a trade somewhere up here. It wasn't that big of a risk to reward. It's about a 1-to-1. But I want to take you through the process again, how I build a narrative, how I build a bias. It's really simplistic, right? We start off with the 5 or the 15-minute chart, like this. The next thing I ask myself, I zoom out. I ask myself, are we sitting in any fair value gap? And the answer is yes. So I mark out the 15-minute bearish fair value gap here, right? We mark that across. It's quite an easy way to find a narrative. I don't like it complex. I don't believe in that. Keep it simple, really simple, and you'll see success. So we have this nice 15-minute FVG. We also have price. If you have a look on the 5-minute chart, notice how price is actually grinding up once, twice, 3 times. That's what ICT calls, and he's mentioned it a few times, 1, 2, 3 drives pattern. A lot of people here, they get caught up in, oh, it's a 3 drives pattern, it's a 3 drives pattern. And it's similar to people getting caught up with just taking any random setup because it's an inversion fair value gap. That is not the case. That's not the way to do it. A 3 drives pattern, what you have to ask yourself, what is the 3 drives doing? You know, what's it doing? What is the 3 drives forming? Like, what's it forming? And I'm going to answer those 2 questions now. So what's the 3 drives forming? 3 drives, by stepping up like this, we're actually generating liquidity on the sell side. And as we know, the market only targets 2 things, imbalances and fair value gaps. And, sorry, they're the same thing, and liquidity. So the market targets 2 things, number 1, liquidity, and number 2, fair value gaps. That's it. So when the market drives up like this, we are targeting the fair value gap, being the 15-minute FVG that I showed you, but we're also forming liquidity and we're sweeping liquidity, but we're forming all this sell side, right? We're forming sell side down here. I'll mark that out in red. We're also forming sell side down here. We'll mark that in red, and sell side down here. Now, I want you guys to appreciate this because this is what I guess constitutes for a really good target or an A+ target. You can have everything in the world. You can have the macro, you can have the 3 drives, you can have the inverse, but if you don't have a clear target, you don't have a clear trade. So the clear target here is this trend line liquidity. But what I want you guys to point out and mark on your own charts is the fact that you have liquidity and you also have fair value gaps resting beneath. So I'm going to repeat that. You have liquidity with fair value gaps resting beneath. And these are often the best liquidity forms to target. But you might say, why is that, Ruben? Well, it comes back down to this principle. The market only targets these 2 things. So if we're looking for shorts here, great. We can target 1 and we can target 2. We don't even have to. We don't have to hold down here. That should be enough of a magnet to at least give us our 1-to-1, which is what we aim for. Sometimes 1 to 1.5 if it wants to run, that's fine. And the rest is the rest. So this is the higher time frame for this first trade. It was quite a good one. It was very quick, one and done. And I want to go back onto the 1-minute chart just to show you guys what it looks like now, just so you can see the framework. And I'll talk about the entries that were mentioned. Now, I want to point out something really important here too. We were on the call with the Discord. I was on the call with the Discord community roughly about here. And you can see how choppy the price action is. Now, I was looking for shorts even here, but there wasn't enough impulse created on the candles. So some people may have got caught out here. If you got caught out here, my advice to you would be to wait for more confirmation, wait for more impulse. If you have a look at this candle where my cursor is, look how, I guess, big that candle is. Look how volume-based that candle is. Really important. And by this point, we're at the very top of that fair value gap, right? We've inverted this space here. I'm just doing that roughly. And we also had inverted this space here too. So we have two inversion fair value gaps. And the entry I called was roughly about here. Stop started up there, aiming for a 1-to-1. As the price traded back up and then dropped down, the stock got moved up here. I think it was to about 6 handles, very minimal. And then there was either a partial here if you wanted it, or you could hold to a 1-to-1, which is fine. And then we started to rebound, but ultimately the price moves down. And you might say, well, why has it moved down, Ruben? Why is it moving down so much? Well, you got to keep in mind that if the market is trending up for so long, we can't keep doing that forever. It always has some kind of pullback and then it'll continue. And this is that pullback, right? So we're doing this for multiple sessions. This is that pullback. And when does this actually occur? It occurs during the macro. So the macro here is from 250 to 310. It's perfect. It's beautiful. That's it. One and done. So that was a really nice trade. That was on that particular day. And so it was a quick one and done. Looking for shorts pretty much most of the day, but that's when the impulse decided to come. So that's that day. If we go back now onto the previous day, I believe the last day there was actually a loss. Let me just double check. Let's have a look. Yeah, so this day here there was a loss. I believe there was one losing trade and then there was a winning trade. Let me just confirm. So this here was the 25th of November. All right, so there was 2 trades here. There was a losing trade here and then a winning trade here, which made up for the loser, which is fine. Now I want to again do the same thing. Same process, keep it easy. Go back to where I was on the call with the Discord, roughly about here. Go back to the 15-minute chart, just keep it really simple. And again, are we in a fair value gap? Yes, cool. So we mark this out. And I talked about this in last week's review video. A lot of people will say to me, well, Ruben, how do you know if price is going to react from the top one, the second one, the third one, the fourth one? Well, the answer is I don't know, and I don't need to know. I wait for price to come into that fair value gap, and then when it comes into that gap, if the market reacts how I want it to, then I take the trade. If the market doesn't react how I want it to, I leave and I sit back. The market could have come down here very aggressively. It could also do that. It could do that. It could do that. So you risk appropriately based on the quality of the setup. So because we have multiple fair value gaps, if I'm looking for longs up here, I'm always reducing by half. Same with this, because I know there's more than one chance that I might need to actually take a trade. If you take too much risk too high up in the range, it becomes very, very dangerous very quickly, because if you're wrong and you risk a full amount multiple times, well, you're done for the day. Whereas if you reduce your average stop loss and you half your risk, it makes it much easier to manage, right? Keep that in mind. So we're on the 15-minute chart here. I think what happened here was I liked price reaction from this gap, and obviously we had the macro coming up very shortly. So I believe there was a trade right here that I caught. I know a lot of people, if you're from my Discord, I saw you took a very similar trade. It was a good trade, right? Nothing wrong with it. We came up, we created a change in the state of delivery right here, like that. Boom, that's your CISD. This is a half risk trade again, so think something like that. And I told the Discord, have about a 10 handle stop, because I want it to run quick. If it doesn't, we get stopped out, we try again. Now what happens? We get stopped out. A lot of people here freaking out. Oh no, what should I do? Relax, number one. Number two, look for the next area where price can react from. Cool. We're coming down a little bit further, right? We're tapped into that next 15-minute FEG. So we remove this. Now we're also inside of the macro. And I believe the trade entry came from here somewhere on that candle, or something like this. Like that, right? And here's the thing, that initial stop out was 10 handles, and I believe this one gave us 15 handles here, because what happened, we swept the high and then would have been a trail of the stop. Yes, we moved much higher. Yes, you could have held runners, but this is like a very small winning day. It was about a 5 handle winning day, which is still completely fine. And it just comes back to the same narrative. 15-minute fair value gap, macro inversion. In this case, you've got that there, right? You can see. And then we react, right? It's the same process. So losses are going to happen. Don't think a loss means that you've done something wrong. It just means that you've actually implemented your system and the probability is just not worked out in your favor. That's completely fine. So that there was the 25th of November. And then let's go back to the previous day. I think that's all. Right? We have those two days, and then the previous day would have been the Monday. Let's just double check. 24th. Okay, let's have a look. So yeah, here was one that I called out in the live analysis section. So I'll show you guys out on the screen, then we'll actually get into the trade. It took a while to play out. This wasn't on a Zoom, but I still called it out for the premium community. So this here again was from the 24th. So I pretty much marked this out for the community. You can see what price is doing. We're coming into optimal trade entry. This is what I'm marking out. If we invert this, then we're gonna probably see price run to these highs or low resistance. Look down the bottom here, it's 2 o'clock, right? So everything's lining up. It's a very bread and butter stock standard model. What ended up happening? Well, we went to target. It took a while, but we went to target. Now you might say, well, why is your stop loss there, Ruben? Well, having it down below here, it's too wide of a stop. So because we closed very impulsively there, you can put it below this candle, but that's risky. What I like to do is just go a little bit lower, right? Another couple of candles below. That gives you a bit of wiggle room, allows price to muck around, then obviously price pushes up and hits the target. So that was Mondays, I believe. So Monday, Tuesday, Wednesday, there were trades that were called out. And this is quite an easy one. After that, if you go back to the charts here, went into chop. Like went all the way up, went all the way down, went all the way up, and obviously the next macro, 350 to 410, we purge back down. And again, this is just from London session. So the stats looking pretty good for this week. I think overall for London session, we're sitting at about 61, 62%. For Asian session, we're almost at 80%, but we've been on a bit of a winning streak there. But just know that, like I said at the start of this video, it's not always going to start off like that. It's not always going to be like this. Losses will happen, wins will happen, and you got to accept both, right? It's really important. So I'm going to conclude it there. Hope everyone has a really good week. Stay safe today, right? We had Thanksgiving yesterday. The volume, we'll see what happens today when the market opens. If you haven't already yet, join the free Discord. The link to that will be in the description below. If you have any questions, ask them below. Again, subscribe if you like this video, and we'll talk very soon, guys. Every single week, I'm doing one of these recaps. Every single day that I have a call out for the Discord, I'm posting on Twitter. I'm posting the wins, I'm posting the losses. I want you guys to see that I lose too. I call losing trades, I call winning trades. But the system, the edge is profitable. The system will work as long as you continue to implement it. As soon as you stop implementing it, as soon as you let the human element come between you and the implementation of the system, that is when your account goes into deep drawdown. That is when you feel like you're failing. That is when you're not going to grow your account. So keep that in mind. Keep implementing the system. It does work. It is profitable. All the best, guys. Talk very soon. Peace out.